By now, you've probably heard that the stock price for the homework helper app Chegg crashed. It cut in half after the company said that they saw a significant spike in student interest in ChatGPT and that they now believe it's having an impact on their new customer growth rate. As an investor, I'm kicking myself for not connecting the dots, for not seeing Chegg as the ultimate big short opportunity, for not realizing that ChatGPT is the ultimate homework helper. Study Buddy probably can replace whatever else Chegg does on their starting at $15 per month subscription fee. I mean, I can't feel too bad for missing it because earlier this year, their CEO specifically said that they were not worried about ChatGPT and that it wasn't valuable to students. But really? Of course, Chegg isn't the only publicly traded company that does education stuff. Tons of other businesses can be disrupted by ChatGPT and AI. Who else? There could be a lot of crashes. So today on Dumb Money, we're shopping for shorts and uncovering all the other stocks that ChatGPT could kill. And
okay,
that's
guys,
normally where the theme song goes. You want to hear the theme song, or should we just go right into it?
Let's just go right into it.
Hey there, Dave here, along with Chris and Jordan. We are Dumb Money. Welcome to Dumb Money Live. Like the smash the like. Chris, Jordan, here are your fun facts. At the end of last year, Chegg said that they had 6.1 million subscribers. That was 29% more than the end of 2021. The revenue was also up 36% from the previous year. This quarter, they actually beat earnings. They said that the revenue, though, would be below the estimates, and they dropped that bombshell about ChatGPT slowing their subscriber growth. So, what do we? I mean, I read that they are working with OpenAI to have their own little chat, their version of a Chegg-branded chat tool called Cheggmate. But before we talk about the other stocks, let's hear your thoughts on this Chegg debacle.
Okay, Dave, they're delusional. Okay, they're delusional. Let me tell you something. 2 days after ChatGPT was released, me and Jordan did a Twitter Spaces, and we talked for 2 hours about what companies were most likely to get destroyed by this new AI revolution. And one of the top companies we discussed at the time was Chegg. We were like, Chegg is going to get destroyed. Here's what happened, though. I was like, it's going to take at least a year, minimum a year, before they feel the wrath of AI at Chegg. It took 60 days. It took 60 days for it to destroy this company, all right?
Yeah.
So this is completely changing my entire outlook on how quickly AI is going to start to disrupt companies. Listen, Chegg basically was a company that made all of its money helping students do things, right? Helping students to study, helping students with projects. Almost everything that you could do on Chegg, you can probably do better on ChatGPT for free. So why are you going to pay like $20 a month or whatever it is? Like, so Chegg is going to say, no. We're going to utilize AI and we're going to actually make the AI easy for students to use. And I know that they will. And I know that some people are still going to pay them money for a while, but there will be 50 other companies just like Chegg in a year or two that are utilizing AI to do the same thing that Chegg does, charging $2 a month, okay? And I'm telling you, the death spiral is inevitable for Chegg. Absolutely, in my opinion, it's inevitable. By the way, we're not financial advisors. This is just my opinion. But I think the death spiral is inevitable for like 20 other companies, at least.
Well, we know that Chegg in the past 3 months is down 89%. Their stock basically wavered all last year, I think down 18%-ish total for the year. But in the last 3 months, 89% drop. That basically is a company going out of business, right?
I mean, the problem is they're not going to go out of business for a while, but the writing is so on the wall. It's like if you use ChatGPT and you use Chegg, you're like, all right, this is inevitable. Like at some point in time, it could be 2 years down the road. Virtually nobody is going to want to pay to use that when you could use this one for free or something that is slightly more like Chegg for a few bucks a month, because it will be, you're going to have an AI agent be like, oh, do what Chegg does. the same exact thing, and I'm going to charge you $2 a month for that.
And Chegg
And
starts at $15, but then they have all these add-ons. Another $10 for some study thing. And there's $100 a month program for exam prep. There's a $400 like one. They have some expensive products, and if a lot of that can be replaced by AI, I don't see a way forward for them, even though they are trying to get into the space directly and have AI products themselves. There are so many companies though that are the exact same thing. Like, just think pure play. Like, what companies use the knowledge of the masses and package it and resell it to you, right?
so, but let's be honest about this. Chegg was like the closest thing to like an obvious pure play, like just a
Yeah.
super obvious pure play that was going to work its way out really quickly because it's just like you can do that stuff so easily on AI. Like other industry categories, you could theoretically use AI to do that stuff, but it's a little bit more complicated and there's a ramp up. And the people that use the other services are older. Chegg is used by students, right? So young people are really quick to get on ChatGPT. They don't care. Like if you're talking about people doing their legal contracts with ChatGPT, instead of LegalZoom, which is a company I think could be doomed long term, like that's not going to happen overnight. It's not like everybody starting next month is going to do all their legal contracts on ChatGPT. But in 2 years, in 3 years, who's using LegalZoom in 3 years when you have 100 different versions of LegalZoom powered by AI that were created in like 6 days or 6 minutes? I don't know, using an artificial intelligent agent that coded the software that's essentially just Chat GPT for legal. Where are the barriers to entry? Where's the moat? The moats are freaking gone, dude. Like LegalZoom is one right off the bat. That's one I'm super worried about.
Yeah. And LegalZoom is, I know that LegalZoom has very specific products and specific contracts that have been pre-written, pre-vetted by real attorneys. But for a lot of like the everyday things, like, Chris, I know you go on Google and just, hey, give me an example contract and I'm just going to change a few things, right? That's how you start
All the
most
time.
of anything that you're doing. You don't want to waste an attorney's time or money, your money.
Dave, okay, perfect example. Wait, perfect example. Last night, we're trying to get out of a lease for one of our companies. We're not trying to get out of the lease. We're trying to like early terminate a lease. And the lease language is so complex and there's like a guarantee and security deposits and all. I could not understand if we were going to get our security deposit back if we were to do this thing called the good guy guarantee and provide notice and pay penalties. And so I uploaded the lease into ChatGPT and I literally said, I'm confused. Can you help me understand if I'm going to get this back or not? And the answer, the way that it answered was so beautiful. It was way more precise than any, I think, actual lawyer would have been able to answer that, because there were some gray areas, but it explained what the gray areas were, and it told
Mm-hmm.
me exactly what to ask and what to look for. Dude, I was about to contact an attorney to do that, our real estate attorney, and I probably saved $300 because of this. So, and by the way, I'm an early adopter, but in 2 years, do you have any idea how much billable hours are going to be lost by law firms? Like,
But
it's
it kind
going
of
to be
goes both
insane.
ways because LegalZoom has this whole brand built around being the online attorney. What if they just wrap, some additional intelligence and legalese around LegalZoom and have their own interface for a ChatGPT bot that is specific to contracts? Would you go to ChatGPT, OpenAI Direct, and upload a contract, or would you prefer to go to LegalZoom that presumably has a little more specific use case on top of AI?
Okay, Dave, it doesn't matter. You know why? Because there will be legal boom, okay? And that's going to be like $1 a month, and it's going to be something to help you do it, right? Like you don't need to go to LegalZoom for that. There's going to be 100 companies. There will be a
But is there
15-year-old that will
liability
create its
in
own
that? Like
version of it.
creating a company that is producing legal documents but has no attorneys on? That just feels like lawsuit central.
No, Jordan. I don't think it's a matter of. First of all, it's not that hard to hire a small handful of attorneys or just gig economy attorneys to do something like that
Isn't
on
they're just like,
contract.
isn't they're just sitting there like reading contracts that that this thing pumps out, and at that point, is it any more efficient? Like, I don't know. I've got a
But
problem
Jordan,
here.
the thing is, look at how much money
Like, it's one thing
LegalZoom
for people
makes.
to do it bootleg out of ChatGPT, and they're like, yeah, I'm taking the risk myself. But then you have a company that's based around pumping out legal contracts using AI. It seems
Jordan, look at how
risky.
much money
I
LegalZoom
wouldn't
makes.
start that company.
There's so much. Anytime you have a company making, I don't know, hundreds of millions to billions of dollars, people are more than happy to use an AI agent, create that company, hire a few attorneys, and be like, hey, we're not as big or known, but we're literally 80 to 90% less, and people are going to use it. There are already competitors. There's a bunch of competitors to LegalZoom right now. Okay. There's already a bunch. There's just going to be so many more that are
Yeah.
AI like centric in the way that they do their work and not burdened by a lot of the stuff that LegalZoom has built over the past decade and a half. But I do think there are better trades here. So I think one of the most fascinating trades in this space, if you think about it, um, think about first. This is a two-layer trade. So think about the companies that are going to have the most amount of layoffs due to AI. The companies that will be able to lay off workers with AI. You're looking at probably so, companies that have like a lot of admin, like accounting services, right? Like you're not going to need as many people that are doing admin, that are doing accounting, right? That are doing legal, like legal type of help. You don't need that many people, right? You can do more with less. So if you look at recruiting companies that specialize in recruiting those types of employees, like Robert Half,
Yeah.
like they have built a massive business.
Is Robert Half public?
Recruit.
Are
Yes,
they?
yeah,
Oh,
I
I
think
didn't
so.
know they're okay.
I probably should check that before mentioning them on the episode. Let me check.
Sure. RHI for
Yeah.
sure.
So Robert Half is a company that's built just an absolutely massive, massive business. We're talking about a $7.3 billion company, and they are in the business of recruiting the exact type of professionals that are going to be laid off over the next few years and will never come back. Never ever. Okay. So to me, Robert Half is doomed. They are completely doomed. And I think when the market figures that out, they are going to trade down Robert Half even before it starts happening because they will see the writing on the wall the same way that people are seeing the writing on the wall with Chegg, excuse
Chegg.
me. So the second that Robert Half has a bad quarter, and if they even mention that it's because of AI, they I think we could see a 50% down day. So they're like very high on my target list. I'm going to be analyzing their data, and any weakness I see in Robert Half, I'm going to pounce on them. I'm going to be shorting that company. So that's probably my number one pick. I have another one I want to discuss, but before I discuss it, I'm going to want to get Dave's opinion because I feel like Dave probably knows more about this company than I do. But do you guys like? What do you guys think? Like, what's your idea for a company that would?
Like my ideas on Robert Half, I hadn't even thought
No,
about
no,
that
I
one.
mean, no. My second pick. I have another pick I want to get your opinion on. But do you guys have any thoughts on companies that were industry categories?
Well,
I mean,
I
there's just
think
so
that
many.
there are just we saw what happened with Chegg. I think that there are so many other education platforms that kind of do the same thing. Maybe not as pure play as Chegg, but not all of them are going to be hurt by AI, and that's where I think there's a difficulty here. Like some are going to be able to implement AI and have a better product at a lower cost. They'll be able to do layoffs in a cost savings, higher revenue, higher profit kind of way. So I saw a list online of a bunch of different companies that were in the same space, and there were some that most I had never heard of, but the ones that I have heard of, I think are not going to be hurt by AI as bad as I thought. So Duolingo is one. That's that app that does uh, it's a language. It's a foreign language learning app.
Yep.
They actually, the stock is up 20% in the past 3 months, and I think that AI is already being used, and they'll be able to use it further to have AI generate course material on the fly in real time to meet the education needs of the person who's learning the language. And I think that they're actually going to be helped by AI, not hurt.
Okay, but Dave, can I pause there, Dave? But what is going right now? Duolingo has a moat because the type of stuff they do requires lots of people and coding and service. It's a lot. They have to. It's like old school. What
Yes.
is going to prevent 100 new companies like Duolingo to come in and undercut their price because it's not super cheap by 90% because they're going to have an AI agent use AI to build another Duolingo. And unlike having to hire attorneys like Jordan was worried about with LegalZoom, they don't have to do anything but create an AI-based language learning model for learning languages. And immediately, Duolingo is a better company, but there's 100 other ones that are just as good as them at 90% less cost. And Duolingo's forced to reduce their fees by 90%. And the company's done. They're spiraling because they have an old school workforce and way more cost than all the new companies that are coming to that space. So I still think they're a death spiral company. I think they're essentially dead. It's just a matter of when.
I think that they will find a way to reduce their costs so that they can compete with these 100 new offshoot. And that's the thing. I feel like we're going to be cluttered with so much terrible content across the board. I think YouTube videos are going to get worse because AI is going to start generating. TikToks are going to get worse because everyone's just going to say, AI, make me the most viral TikTok video ever. And it's just going to be terrible content, like read by a robot that is just not good. And yes, AI may get better at knowing what people want to see, and it may actually be, but it's just going to be terrible. And I think that the 100 offshoot companies that are doing just what you're saying are going to be subpar, cheap, junky versions of the real thing.
Nope. No, they won't. No, they won't. They will be better than the real thing because they will be AI native, and the AI agent is going to know how to build a better language training model, teaching model than these random people at Duolingo can build. I think it's going to be better. They'll probably be more customized. They have nothing to lose by taking risk because they're not worried about disrupting an old model that they're already bought into. And I think there will be 100 of them. Maybe 70 of them will stink. 30 of them will be great, but they will all be way cheaper. So much cheaper that no matter what, Duolingo will lose. You could make a case that none of them will win, but Duolingo will ultimately lose.
The App Store is going to be a dumpster fire of crappy apps that people have just like whipped up. Like, AI, make me an app, and AI, make this better, and AI, copy this app. And there's going to be so many terrible apps out there that I'm not going to want. I'm going to need a filter. Was this AI created by a creative person using AI, or was it just AI on top of AI?
Dave, you're looking at it all wrong. You are going to have an AI agent that knows you really well, and you are going to ask that AI agent to find you the best language learning platform for you. And it will go out and do all that work. You're not going to be in an app store. You're not going to do any filtering on your own, Dave. It's already going to know the type of things that you like from past experiences, and it is going to find the perfect one for you for 50 cents a month. Okay.
I need that app right now. I need the 50 cent a month app that will help me sort through the dumpster fire of App Store junk that's going to be out there that AI created. Can you make that for me, Chris?
The AI agent's going to be free. The language model that it does, the app it finds for you will cost 50 cents a month, which is what's going to screw Duolingo, because the chance that it comes back to you and says, Dave, and by the way, this is all going to take half a second. And it's going to say, Dave, I've looked at 800 language services, and the very best value for your money based on the way that we know you like to learn, the things that are important to you is Duolingo. That's never going to happen. It's not. They're screwed. They're a death spiral company. They're done.
Okay, what about Adobe? Is Adobe over too?
Because that's the one I want to ask you about. And here's why I want to talk about Adobe, because they're so fat and so juicy. They're so big. That company, what's their market cap? Like $60 billion?
Well, and they're basically, they're almost, they're not a monopoly, but they're basically a monopoly for creators, right?
It's not just creators. I mean, Adobe has like the software for video editing.
That's what I'm saying. For like anyone that's doing, if you do video editing, if you work as a professional working on, making ads and anything in the creative realm, you probably have Adobe Suite.
That is true.
100%. This AI is going to make Adobe products way better. We can all agree on that, right?
It already has. They've already implemented.
Matt, one of our subscribers, he mentioned this a few minutes ago in the chat.
What? That it's making them better?
Adobe. That Adobe
that it's making them.
It'll be a competition to Adobe.
Adobe, it's every product they have is about to be a commodity. Okay, so they have like 20. Yeah. They have like 20 products, okay, Jordan? Those 20 products together generate so much money, it's actually insane. They are dominant players in their industry categories. They dominate, okay? So they're able to get a premium on all these products. There are about to be 100 competitors for each of their products. Yes. It could be 6 months, it could be 12 months, it could be 18 months. And even though their products are going to be better, they're going to slowly start losing a little bit of business to the person who's like, you know what? I saw this new Photoshop style thing that's AI created. It's like a quarter of the price of Adobe, right. Price sensitive. And instead of Illustrator or Photoshop, I'm going to use this. And on it, there's going to be an earnings call at some point where Adobe says, we were short on earnings, we're losing a few people in this category, and someone's going to read between the lines and going to be, did you lose them to that AI software? And they're going to be like, well, we might have lost them, and that's it. That's it. The stock's going to get cut by 50%. I'm telling you guys, I'm feeling it. I'm feeling how this is going to go down. I don't know how quickly, but I think it's inevitable, and right now it's exciting the crap out of me because I'm like, if we could time just 2 or 3 of these, right, the money that could be made is so obscene. If you're watching this show right now, if you don't realize the opportunity that's in front of us, like we are about to experience the biggest change that we have ever experienced in our lifetime, maybe outside of the pandemic, the stuff that happened that year. And
when it's time for change, you got to rearrange. Did you notice your voice just cracked there?
I'm excited, dude.
It's time to change. Remember that from the Brady Bunch?
Dude, think about the opportunity. If you would have nailed that Chegg, right? The Chegg was the first one. It laid the groundwork.
I think Adobe is ready to be disrupted. I think Adobe has been this industry behemoth for so long. They're a $150 billion company. They have 30,000 employees, and they make software that could easily be replaced. They haven't been replaced for forever because every designer loves Photoshop and Illustrator. But they can learn. New tools can come out, and we've already seen disruption. So their big video editing platform is called Premiere. There is a huge shift right now of video editors moving over to DaVinci Resolve because it was known as the absolute best color grading tool. They've added some AI and color grading, but they also then expanded out, and now it's a full editor, a full sound editing program. It replaces Premiere. It also replaces Final Cut and all of the other editors. And there's a big shift of editors moving over to it. I could see that same shift happening with their other big products like Photoshop. As soon as there's a better Photoshop that's free, that's the thing. DaVinci Resolve is free. Premiere costs, I don't know, $70 a month just for that program. Who's
Oh
going to
man.
keep paying that?
All right, ready for this, guys? Now think about this. This is all happening in the midst of a recession where people are looking to save money. So imagine all of these products, right, that you're paying X amount a month for, and now there's an AI centric one that potentially is even better, or it's the same, or a little worse, but like it's free, or it's like 95% less money. Like, dude, this is
There's
kind of insane.
there's no reason not to try the free one, right? There's no reason not to, even if you have to pay $100, you're paying $70 a month. Those subscriptions for Adobe where you get like multiple products bundled together, I personally have canceled down to, I got rid of everything except for Photoshop. And as soon as there's a better program out there than Photo, and I know there's several free versions of things that are Photoshop like. I'm so used to Photoshop that it's still worth it for me to pay $25. I found the lowest package price possible that includes that, and I think the photo editing Lightroom, which I don't even use, but they're priced out of the price, just insane. It doesn't make sense, especially when there are free alternatives popping up left and right.
Dude, I'm with you, man. I'm 100% with you on that. I think Adobe Robert Half and Adobe might be my two kind of favorites in this area, but there's so many more. So we talk about the education companies. The education companies are kind of at risk. We talked about I think recruiting companies are definitely at risk. I think Robert Half, especially. I think software companies like Adobe that make the type the type of software that's easily disrupted by AI, which Adobe is in. That's the thing. Like, there are other software companies you can make a case that there's a larger moat, perhaps, but Adobe, I don't think there is with AI with a lot of their products.
Adobe's main moat is that they have this history of every creative person learning the program like years ago.
Yeah.
And so something has to come along that is familiar enough for a creative to say, oh, I know these tools, I know how to do it, and I'm not going to have to relearn my entire livelihood to be able to switch to an alternative to Photoshop.
So how about customer service companies like Salesforce, right? Zendesk. Those guys are also at risk. I just don't know how quickly. Like, I'm looking for companies that are going to get theoretically found out or exposed like this year. This year, I'm just not 100% sure because of how deep these companies are in with the enterprise market.
Salesforce is this giant bloated company. You've been at a company, you've been at one of our companies that we tried to implement Salesforce. It is such a headache to do, but once you've installed that, it's harder to replace because
I was at a company that spent 2 years, had a team of like 8 or 9 or 10 people just developing customization of Salesforce for our Salesforce in our company before it could go live. So it was like a 2-year development cycle to onboard Salesforce into the company. So I imagine it might be a 2-year cycle to get rid of it. I have no idea.
unless AI can just say, hey, look at what we've implemented with Salesforce. Look at our policies. Look at our current operating structure. And here are some headaches that we currently have that are unsolved. Can you whip up a new CRM for us that solves all of that and already has the integrations to our existing API plugins that we've written custom for Salesforce? That could be disruptive right there, unless Salesforce is able to somehow replicate that. But they're such a big, slow industry company.
Dave, it's inevitable. It's inevitable. I agree. I just don't know if it will be exposed as quickly as some of the others. On that same note about companies, I think everyone's saying will be disrupted, but I don't think it's going to happen like very soon, is Fiverr and Upwork. And here's my thesis there. My thesis is that, first of all, if you the data that I've seen on Upwork and Fiverr is that there has been a massive amount of onboarding of workers in the last 60 days to those platforms as people are getting laid off or looking to generate more money for themselves. So they have a lot more supply in terms of workers. Now, I don't know if the demand is ticking up, but the concern about shorting those companies is that I think they might actually benefit from AI initially before they get destroyed by AI. So I think most people are not going to be comfortable just diving right in from an enterprise level or a corporate level or even a small business to actually utilize AI to help their business in various ways. But gig economy workers who have the confidence and skill set will adopt what they do to leverage AI to do what they do cheaper. So I think that they might get an initial boost of business, but in some time frame, like a 12-month time frame, I think the people doing business on those gig economy platforms like Fiverr and Upwork will start to lower their rates because they're going to undercut each other because what they're doing for the client is so easy now with
Yeah.
the AI tools that they're using.
Yeah.
All they is really a middleman between the boomer customer or even the
Who
millennial
doesn't
or
know how to
Gen
dive in and do it themselves with AI.
and
And
AI, right? And so they're
they
going to
just go in and do the work.
undercut. So what
Yep.
happens when they undercut? When they start undercutting too much, I think the percentage of that revenue that goes to Upwork and Fiverr also starts to get undercut. So I do think they are inevitably screwed. I just don't think it's going to like happen really quickly. I think it's going to be confusing because we might see a boost in their business.
Yeah, we're going to need more companies that put basically a wrapper around AI and make it easier to use for companies. And like, if you're a worker at a company, you're not going to hesitate jumping on OpenAI and having ChatGPT write your emails for you and do your work for you. But from a company level, it's going to take some enterprise level version of AI to be the adopted solution for the full company.
Agreed. Sorry, guys, I'm just pulling my notes up here.
Matt's saying that I just need to pirate an older version of Photoshop. No, I need the latest. I always need the latest. The new cutout tools that they have, the masking tools and the AI that they use to do that has made Photoshop fun to use again. It does so much for you, but there are also websites where you can just upload an image and say cut out the background and it does it for you. So it's like there needs to be a more complete solution, and then I'm done.
So just another one that goes back to like customer service and communication, Twilio. Twilio, they're down right now, but they built up a fairly robust business that feels like AI can kind of replicate pretty quickly to me. So they're at risk as well. But Dave, the Adobe play, like, because it's so big and fat and at risk.
So much room to fall.
By the way, Robert Half is an $8 billion company, and not as much room, but I mean, there's still plenty of room to fall if and when they get exposed. What else, guys? I feel like there's just so many companies that are going to be at the wrong end of AI, dude.
Here's a list that I found online. Are any of these ones that you want to talk about? Pearson,
I think,
2U.
A lot of those, I mean, we've covered them. A lot of those are I never even heard of Nerdy. A lot of those are educational companies. I don't know what the hell's Nerdy do.
Adobe did make this list.
I'll say one other thing. I do think that this is kind of a tangent, but commercial real estate. I know everyone's already concerned about commercial real estate, right? I think this perfect storm of AI adoption at the cross section of work from home So all these companies, as we know, tried to get people to come back in the office, and they're basically forcing people to come back in the office. So like some of them are coming 2 days a week, 3 days a week. It's pretty much been exposed as a huge joke now. And everybody now knows it's ridiculous. The offices are half full. Even management is like, this is just stupid. It's not productive. We're asking people to drive into work half the time. They basically come in, they set their laptop in their cubicle, and they have monitors they don't even look at anymore. It's such a joke. Like, I think we're about to enter this massive death spiral of corporate, especially office real estate. And everyone that's saying like, oh, they're just going to convert those buildings into residential. Let me tell you something about that. First of all, residential gets a lower rate than corporate, but that doesn't even matter because most of these buildings are not set up in a way that they could even be converted. And the reason for that is residential needs plumbing, okay? Lots of units on a floor, all those units need plumbing. These buildings are not set up in terms of their structure to handle that type of internal plumbing. I was kind of reading about this past week. So I was like, because why don't they just convert them all to residential? They'll take like a 25 to 30% hit, but they can still, it's a lot of money to convert them. But the plumbing is a major issue that I never realized before. And that's why you can't just flip a building from commercial to residential because you can't, I mean, it's almost, a lot of these buildings, it's almost impossible to convert them because of the plumbing issues you would need for all those residential units.
There's a really good YouTube video. It has 360,000 views. I just watched it. Why we should live in our office buildings. It talks all about this. And also the downsides and also some like really innovative projects that are going on right now. So this is a dude named Stuart Hicks. 360,000 views on this. I recommend that video. When you're not watching Dumb Money, there's occasionally some other things on YouTube that are pretty valuable.
And by the way, nobody wants to live in cities anymore anyway, right? Like, if you see what's happening to Chicago, to San Francisco, to LA, like it's kind of like the regional banking crisis. One city goes down, the next city goes down. It's absolutely wild what we're seeing right now. It's like it really is the perfect storm, and I think AI is that kicker to really just really completely destroy all that office commercial real estate. Because when the layoffs happen, and I think they are going to happen over the next 12 to 24 months, that's just going to be the last straw for all those office buildings. Nobody wants to work in those buildings. They're all canceling their leases. Can we just
we need to do a whole show on real estate because I feel like it's also a perfect storm for real estate nightmares right now, with interest rates as high as they are, with foreclosures starting to pop up, with people with adjustable rate mortgages being priced out of the market. Did you notice how much your real estate tax went up this year, Chris?
I don't want to know. I haven't looked yet.
It's insane.
I've heard from other people in the neighborhood that it is almost comical.
Because, well, think about it. Real estate spiked, and the assessment value for local real estate taxes is kind of a lagging indicator. So real estate was up. It's probably lower now than it was when these houses were assessed.
Not in our neighborhood.
Not in our neighborhood. We're the exception. But my taxes went from, just in the past few years, went from like $30,000 a year to $45,000 a year.
Wait, they can only go up 10.
That is
wait,
with
Dave, they can only go up 10%
about
a year.
That is with the cap. 10%. I know it's a 10% cap every year, but if you are at that cap and you go up 10% every year, you get there pretty quickly.
Yeah. No,
and now I'm at that cap, and the amount they raised it this time, my tax bill being $44,000 this year is going to go up 10% next year, 10% the year after, because the appraised value is still way higher than I'm paying taxes on. It's just and now I'm going to have a 10% raise in my taxes every year for the rest of time until it catches up.
Jordan, this is where you were really smart, like moving into a equally beautiful but more modestly priced neighborhood, not in the middle of Dallas. And this is where Lynn's getting really screwed. The only way you feel good about this stuff is you got to remember what Lynn's paying on that house. I think he must be up to like $150,000 a year in real estate taxes on that thing.
Oh my gosh.
It's
Is that
got to
right?
be, right? It
Yeah.
has to be. Does he have to pay that on his yacht too?
Well, and he also, doesn't he own multiple homes?
Oh yeah, he owns like five or
Yeah.
six.
So and only one of those he gets the homestead exemption.
Oh, he doesn't even get the exemption.
Think about
on
that.
The others.
Yeah.
Oh, question.
Good thing he has a lot of money. That's all I say. Very tiny violin for Lynn having to pay high taxes.
Yeah, totally.
I hope he's watching.
Totally.
I'm sure he'll text me.
This is related. I feel like this is a related question for you, Jordan. So because we're talking about layoffs, they're coming. AI is only going to accelerate those layoffs, but there has always been this fear of big companies, like really big companies, of how much they could actually lay off before they're putting their company at risk, specifically as it relates to tech and like their infrastructure and not having downtime. Like there's just massive fear. The only human that's ever lived that didn't have that fear was Elon Musk. And when he did what he did to Twitter's kind of tech department, and the amount of reduction in that tech department was obscene. We saw videos of very senior people in that tech department that were laid off that basically came out and said within 90 days, Twitter was going to stop working with 100% certainty. These are really smart engineers that had been working at Twitter for many, many years, that knew what they were doing, that I watched their videos. They're like, there is actually no way that this company will survive more than a few months. Somehow he managed to do it. And I still can't figure out how, at least on the tech side of that business, right? Because it's such old, infrastructure. Like, Jordan, does this change the game for how company, because you've been a CTO, right? Does this change the game for how CTOs and CEOs will think about how much they can lay off? Because, hey, if Twitter did it, it's still working. Which is kind of crazy. Like, how do you do it?
I don't think so. Twitter's that's a very special situation. And I think it also really depends on what the company does, like what they've, got going on. I think you are going to see layoffs, right? We're going into a downturn. I think people are looking to trim fat. It depends on what projects you want to keep on the books, which ones you're willing to let go. But yeah, I think.
But don't you think in the boardroom where they're trying to figure out, okay, we know we're going to cut 8,000. Right. Can we cut 20? And that conversation, someone's going to bring up, look what Elon did. From an infrastructure standpoint, a downtime standpoint,
but they also lost a
huge
portion of their revenue when Elon took over, right?
No, but that's unrelated.
That's separate.
Unrelated. That has nothing to do with that has nothing to do with like their employee power and keeping the company going. That was like him being ridiculous and doing what he does to scare off advertisers, right? But like, all I'm saying is, I feel that Elon, what he did and what he pulled off at Twitter, just from being able to lay off 80% of a company and really not have it be meaningfully felt.
You can look at, like, let's say you look at Salesforce and you look at the number of engineers they have and you say, okay, well, we just want to keep the lights on. Then yeah, they could probably lay off a huge portion of their staff, but that's not how companies work, right? So that's not how.
But is it fair to say that Elon, while we can argue over the products that he's releasing, I personally hate them, but we can argue over whether we like them or not, but he's been releasing as much or more product than Twitter ever has with 80% less staff.
Twitter seems to be.
I don't know about that. What products are you talking about?
He's been changing stuff. Like, look at what he did with Twitter Blue. Look what he did with
things. But
he's experimenting. He's experimenting in a way that when they had a giant bloated staff, they were unable to be nimble and do
Right.
things. I think that speaks more to like his style of like go fast and break things. Kind of more, like I said all along, he turned Twitter back into a startup company instead of the big behemoth. I worked at Yahoo for a decade. That company was giant and bloated by the time I left, right? And they went through multiple rounds of layoffs, but they could have gone way deeper with those. But they didn't. I think what Elon did is basically he trimmed the fat to the point where there was only skin and bone left, and kept things going, and found the people who were still motivated enough to be there and made them work harder.
I think it's fear and power that keeps companies so large. I've been in big companies. You have, Dave. Jordan, you have for a small period of time been at some very like I've spent a lot of my career in those big companies, and I'm telling you,
half
after
the game,
seeing what
Chris, half the game in those big companies is getting more headcount for your division.
Of course.
All these companies, like, you're more successful as a manager if you have a bigger team, and so the incentive structure is I will be paid better if I have more people working for me. And so I'm going to every meeting thinking, well, you're asking for a new feature. I think I'm going to need 12 new engineers.
But we've never had a situation where we've had this perfect storm of a recession, AI making it so you can do the same amount of work with one person that you could with 3 or 5 or 10, and also have a
but it's
case
not like
study.
every job gets more efficient by 3x. Like that's,
but
I think
also
that's
have a case study of a company like Twitter that laid off 80% of its employees and is still operating and releasing products.
But we don't
and
know.
doing
We don't know what projects they nixed, what future growth plans that they are giving up by doing that. So basically, they shut it down to like a keep the lights on and it maybe be able to iterate slightly on the products that they already have mode. Right now, is that good or bad for the actual company? Like, I don't know, Chris.
Supposedly, they're rewriting the entire code base right now.
As far as those types of things are concerned.
I guess what I'm getting back to here, I want to come full circle. I think this perfect storm of having a case study with Twitter being able to reduce its employee count by a massive amount and still be fine in terms of operations, having a recession, and now also having AI give us the ability to do a lot more work with less, all comes back to me of having a lot of unemployed people over the next couple of years and really very little need, if any, for recruiting companies. So I cannot wait to short Robert Half as well as other recruiting companies. I feel like that has to be one of my highest conviction short picks on this whole AI disruption trend. Any company that is related to employees, including corporate real estate, okay? Because they need both employees, and they have yet another factor working against them, which is the fact that nobody wants to go work in a building anyway, okay? And they certainly don't want to work downtown, okay, in an empty downtown where there's crime now being reported on social media every 5 minutes. Like, oh, by the way, did you see that story where not only did Whole Foods leave San Francisco, one of their main stores, but Nordstrom pulled out both of their stores, Nordstrom and Nordstrom Rack from San Francisco. Yeah. Dude, I think this is about to spiral in just an insane way in San Francisco. And their tax base is already going to get destroyed with the recession and the lack of capital gains. And now you have only half the number of people going downtown to shop, only half the number of people downtown working every day, spending money on restaurants. I mean, dude.
Wasn't CVS also pulling out of certain major metros?
Yes,
CVS
dude.
And some of these guys?
Is nobody, like, I know people are talking about this, but do we not realize the implications? It's not just, it's Chicago, it's San Francisco. Yeah. These are like two of our premier, this is not Detroit, guys. This is not Detroit. This is a freaking problem.
Yeah, but there were policies that are kind of causing this, right? Is in that they're not enforcing shoplifting, crimes and things like that, right? So wasn't that part of the deal? Like you can't stop somebody for shoplifting if it's under like $200 or $500 or something like this. That's one of the
Yeah, there are bad policies. The problem,
Yeah.
Jordan, is that when you look at the policies that have been enacted in these cities, it's part of the problem, not all the problem, but it doesn't get reversed quickly, right? Like
Yeah.
these are problems that once they start to spiral and get too big, you start to recruit a lot of people with mental health issues, and it just starts to
Once
spiral. And
once
you
your
look at a city like
downtown has tents on the sidewalk and nobody does anything about it and nobody cares, you're basically going to have to shut down business in downtown.
But Dave,
Yeah.
once the businesses start leaving, and also like Jordan, I think I saw a stat, I don't know if it's correct, but I saw a stat where the city of LA or LA is spending $6.5 billion a year on the homeless problem. It's basically become an industry. And the problem, since they started spending all that money, has gotten 3 times worse, not better. So now they have like an entire industry revolving around having a massive problem, and it's a government industry, okay? Which you know how that works. They get bigger, never smaller. I don't like where any of this is going in terms of society and our economy. But as an investor that gets to do whatever the hell we want, man, are there going to be some opportunities to like trade on this massive shift and change
This
that's
should have been
happening.
a whole another episode because we're talking about AI taking over companies, and now we're talking about the homeless population in major metropolitan areas.
Well, I listen. If you're watching the show, uh, you should be, as an investor, you should be really excited. You shouldn't be sleeping at night. You should be up trying to find opportunities because I'm
You're
telling
not.
you something right now. Let me just say something right now. This is a guarantee. We're not financial advisors, so I'm not. I don't really mean
You're also
that.
not a medical
But
advisor. People should sleep.
yeah, they should be. But there will be multiple companies over the next 12 to 18 months that are going to be slaughtered, just absolutely slaughtered because of the things we're talking about, because of the AI disruption. And if you can detect them and time them, the money to be made is astronomical. It's 5, 10, 15, 20 extra money on some of these trades. So, like, as a community, let's come together. By the way, dumbmoney.tv/Discord, that's where we should be talking about this stuff in the research channel of that Discord group. Let's surface this stuff. Let's vet it. Let's trade it. I mean, like, there's so much money to be made in the next year just detecting, like, connecting the dots between the innovation in AI and the companies that are going to get just completely destroyed by it as barriers to entry come down, as the moats go away, as dozens to hundreds of AI generated competitors start to enter these spaces. I mean, the incumbents might survive, but they're not going to thrive, and they're going to start to fall apart, right, in terms of their valuations and their revenue model.
Yeah.
Like, it's I see it as inevitable. I can't identify a situation, guys, where this doesn't play out. It's just a matter of when. Like Chegg, I knew Chegg was going to fall apart. I just didn't think it was going to be 60 days from now. I thought 60 days from when ChatGPT came out. I thought it was going to be like a year and a half down the road. Dude, so we need to start putting together these pieces now, like right now.
Well, you've come to the right place.
Well, I
If
think
you
that's the
haven't subscribed
issue
to
is
this
that the
channel,
management teams that are at these companies that are going to be disrupted, they're putting together the pieces and they start mentioning them in earnings calls, and that's when it wakes people up,
So
which
Jordan,
is
do
what
you
happened
think
with
they're
Craig.
not going to mention it in earnings calls? Like even if it's AI is eating them away, like they'll probably
yes.
never admit to it, right?
Yeah,
They
some
can't.
companies will, some just depends on the management team.
I think we
But it
just
won't
saw
even
with
matter.
Chegg. I think we
Yeah.
just learned with Chegg that saying that AI or ChatGPT or any of this is disrupting your business or slowing your customer growth. You're going to talk. You might talk about customer growth slowing, but you're not going to mention ChatGPT in your earnings call ever again after what we saw happen with Chegg.
This is why I'm putting so much money into Molson Coors right now, because although I do not believe in the future of beer, I think that will ultimately go away completely too. I
Look
don't
at
think
that
it's going
stock
away
chart.
this year. Okay, beer, cheap beer. We're in a recession, guys, or close to it. Okay, and people are still going. They're probably going to drink more, but they want to drink the cheap stuff. Okay, and they can't drink the Bud Light cheap stuff anymore because even if they don't care about any of that political nonsense, they're going to get ridiculed by their friends for drinking it. I saw a video of a stadium yesterday where they had an entire Bud Light like whole vendor station. There was a line at the booths right next to it, like 60 people deep, not one person at the Bud Light stand. And it's because I felt that people were afraid of being ridiculed for holding a
Yeah,
Bud Light can.
yeah.
Like, it's wild.
Whatever your politics, holding a Bud Light can has some kind of a ramification now.
Dude, you can't in a bar, like the second you hold one, it's like making a political statement, whether you care or not about the politics. So
Yes.
we're in a recession. People are going to drink. They want to drink the cheap stuff. They're not allowed to drink America's #1 brand, the cheap stuff, which is Bud Light anymore. So most of those people are going to go to Coors Light and Miller Lite. I'm telling you,
So,
to me, it's the easiest trade. And you know what? Not going to happen? AI is not going to disrupt beer drinking in 2023. It's the
true
one area
story.
that's completely insulated from AI,
Completely.
right?
So I sold my tap Coors options. I sold them for a 200% gain right after their
Nice.
earnings announcement. It looks like the stock's still holding on. It's in the last 3 months up 23%. So that was a great call, Chris. Are you holding any more? I know you had options, so I know you're gonna have to make a move. Are you going long for longer in tap?
I made 6 figures on that tap trade, and I kept half of my options, and I'm probably going to go in deeper. Okay, so that's the answer.
How long until those options expire?
So, they expire in a couple weeks, but here's what you need to know. Hedge funds and the sell side banks that work for Wall Street, they have access to credit card receipt data. And they get this data every single week to 2 weeks. So you don't need to wait until the next earnings for Molson Coors. Every 1 to 2 weeks, hedge funds and all the institutional investors on Wall Street are going to see that data on Molson Coors, on how many Coors Lights are being sold, on how many Miller Lights are being sold. So if my thesis is correct, and this problem for Bud Light not only stays where it is, but potentially gets even worse and continues to benefit Coors and Miller Lite, Wall Street is going to see it every week, and every week they're going to continue to buy that stock. So I'm not buying options that expire in 3 months. I'm going to just buy like short-term options that expire every couple weeks, so I don't have to pay that much of a premium on them, and I'm just going to keep flipping them.
Keep rolling them,
right? Yeah, the only concern is the
Noah
market.
has a interesting point though, that Bud, the Anheuser-Busch company, is so diversified it doesn't even matter. They own Ghost Energy.
I'm not trading Budweiser though.
Yeah.
But your whole thesis is that because people are no longer drinking Bud Light, they are going to be drinking Coors, which I totally agree with. But do you think that's going to have a big enough impact on Coors when it's just Bud Light switching over to Coors, and it's not necessarily all of these other Budweiser, Stella, Landshark, all these Busch, Natty Light, Michelob.
What I think Chris is saying,
Steve.
so Bud is a different animal, right? And so Bud can greatly benefit just from all the things that are going on in Asia, some of the China reopening, things like that. And so Bud can keep winning where they're going to win. And yeah, it's a hit to their, domestic beer sales. But, I think the domestic beer sales aren't even 25% of their revenue.
Okay, so Dave, let me answer your question.
Is it going to have enough of an outsized impact on
I'll answer the
Coors
question.
going forward?
I'll answer the question. They're up 16% according to credit card receipt data. Coors Light and Miller Lite sales right now, and I believe this is at the store. I don't believe this is not restaurant data. I believe this is at the store at retail. Is up 16%. So if that continues, hell yes. Do you realize that Miller Lite and Coors Light sales for Molson Coors, I believe in the US, are more than 50% of the company's revenue? So if those sales go up by 16%, you could see an 8% lift in company revenue. Are you kidding me? On top of that, at my restaurant, I think Miller Lite and Coors Light sales at my restaurant. Granted that we live in a conservative neighborhood in the South, in Texas. Okay, lots of students. All right, up 30%. 30%, guys. We're selling 30% more Coors Light and Miller Lite at my restaurant. Okay. Now, that's probably an extreme example. If my restaurant were in California or New York, it might not be that severe, but still, we're seeing double digit increase. And Molson Coors refused to reflect that in their earnings guidance when they reported this week. Okay. So I think this next quarter for Molson Coors is going to be the biggest blowout quarter ever. The only reason why I'm not like going all in like a junkie right now on call options on Molson Coors is because the market has me a little worried, right? Like between the banking crisis, between the recession, between this debt ceiling thing that's happening right now, if the market gets hit 5 or 10%, it's going to take down Molson Coors. And I don't want to be stuck in a bunch of options that just get zeroed out because of something that has absolutely nothing to do with the stock. So you have to kind of be careful here. But dude, I love it. I love that trade. I still
banks collapsing probably helps the drinking industry.
Well, it does, but the problem is when the ETFs trade down and the indexes trade down because there's outflows and people are looking to protect their money, the funds are forced to sell everything and it's going to get sold off, which, by the way, if that happens, that opens up an even bigger opportunity to pick up Molson Coors 10% cheaper from here. That would be awesome. I mean, I'd lose money on my current holding, but I'd double or triple down if that happened. So anyway. Yeah, I mean, there's a lot of opportunities.
That was a lot of additional stuff at the end of an episode about. We just need to do like 6 episodes a day where we can just do one topic per episode.
This could be a 10-hour show. If we want to dissect every company that's going to get destroyed by AI, this could be a 10-hour show. I think we picked some good ones. Like I said, I think Robert Half, the writing is on the wall. I think Adobe, the writing, and you agree, Dave? That's your pick, right? Adobe's writing on the wall.
I think Adobe. I mean, as much as I liked their products, I really see them not being able to sustain that subscription model when better, faster, newer versions of their tools are available.
Okay, Jordan, you got to pick one company that's going to fall apart in the next 12 to 18 months because of AI. What do you think? Or what sector? Is there a sector you think is there a sector that gets crushed worse than like recruiting or
like an entire sector because of
or
AI?
an individual company?
I think about sectors differently, I guess.
Or an individual company, like, or just anything. Or do you think I know you're like a macro guy, so like, how do you see it impacting? All right, this is actually a more important question for you because you think about macro every day. With the disruption that's about to happen, and okay, not everybody follows Chegg, okay, but if this does happen to Adobe and it does happen to 8 or 9 other companies, at some point there's going to be a macro conversation here about how AI is going to impact the economy. Like, have you thought about that? Like, is that going to freak everyone out, or is it like, how do you see that?
So when you have big technological changes like this, it's going to make, there's going to be winners and losers. We're going to have more efficient labor to a certain extent, especially in certain industries. I think, tech and office work, kind of white collar work should get more efficient, which means you should probably need less employees. but also drives up innovation somewhere else. And so those jobs should just shift somewhere else. I don't know exactly where they're going to shift to, but I think it creates opportunities and it creates efficiencies in the market.
Okay, so we both agree that in the long term, this is a huge boost.
Yeah, it's a
Boost
boost.
in the
It's a boost.
economy.
Yeah, because you get more
Boost.
productive labor, but it structurally changes things, and that can take a while to shake out. And so there will be, like you said, there will be winners and losers, and
And losers specifically being workers that don't have a lot of money invested in assets that rely on their income from their job that they might not have anymore in 2 years. Those are the biggest losers, and we got to figure out what we do with
yeah, I mean,
those.
you'll also get, I mean, but you also get like an investing cycle with this, right? And so there should be capital investment, which means there will be, which should create hiring, and so they might be different jobs. But people will
In
have to
time, I
adapt
agree.
skills and go, find the new jobs that come about because of the technological change.
Yeah, I totally agree with you. I think that it I am certain that we will find new jobs for
Yeah.
all the people. I just don't think we're going to find new
I don't
jobs
know.
at
So
the
that's one of the misnomers, right? So it's not all the people, but there will be centers for getting, there will be places to get jobs. There will be new skill sets that you need to have jobs. And so it will create dislocations and some people will be left behind.
they'll be
Um,
left behind in the short term, but in the long
yeah.
term, there's always different. There's always something new, right? Like in every major
Well, think about
cycle,
like
and I know
Detroit,
this
right? So
one.
like we think about like the industry that used to drive the economy in Detroit, basically there was a big flight once that, once that industry kind of didn't really dry up, but kind of changed structurally. And but there are people that were left behind in Detroit that aren't doing as well as they were doing because they didn't adapt and change and move to where the jobs are.
And I think people don't
That's just like
often
one.
see,
That's just one example, but
people don't often see that our world today could get taken over by AI and half the jobs can disappear. But because half the jobs disappear, that wealth doesn't disappear. It gets redistributed
right.
through the economy, through innovation. And now we could be a better world. I'll give you a perfect example of that. Like the way that we treat animals, right? For globally, right? For our farming and everything else. There's probably a better way to do it. We could have people playing with cows all day to keep them happy until we slaughter them, right? I mean, I know that sounds stupid, but what I'm saying is there are things we could be doing better once we get rid of today's problems. We can reallocate resources to problems that we would have never have thought were worth the time spending people power on, right?
Yeah.
Elder care, right? We can have people just spending time with people that have mental issues, right? Just being their friend. Like there's so many things that we could have people doing, but the problem is those jobs are not going to get created at the same time that they're getting laid off. So we're going to
Right.
have this period of time when I think, Jordan, there's going to be a macro freak out potential,
There could
right?
that
Like
that's certainly a possibility. It's certainly a possibility, especially when you're seeing liquidity dry up because of interest rates
yeah, that
and just
that
the cycle in general slowing, and turning over.
that worries me.
Yeah,
Um, can't do anything about it though. It's gonna happen.
you just have to know that
Ugh.
it's probably going to happen, or something's going to happen, right?
I'll
Watch
tell
your
you,
back.
we're at a point in time where if you're not part of the investor class, or if you're only minimally involved with the investor class as an investor, now is the time to wake up. All of the world's wealth is going to get pushed into enterprise. Yes, the AI revolution is unstoppable. It's happening. It's going to happen quicker than we realize. Robotics, that's coming too. You combine robotics with AI, dude. It's a game changer. This is happening, and the only way to win or kind of replace your income is to put your chips with the winners. And that way, if and when you get laid off, you have another way to generate wealth for yourself when, the factories take over and the robots take over. If you're invested in the robots, you're invested in No, the chips that go into the AI machinery, right? NVIDIA, call out for NVIDIA there. It all kind of evens out, right? So I had something else that was important to say and I forgot. So I don't know. It's been going on too long.
This is a long day of dumb money. Thank you guys so much for tuning in. If you caught both shows today, you've been with us for over an hour and a half, hour and 45 minutes. Chris, we can't do this. We have to break these up into smaller shows. Nobody's going to keep watching.
Fine. I have so much more to talk about. I mean, there's so much opportunity. Please, guys, go in the Discord. Let's get a good conversation going. If we could even find one great company to short, and we could time that short between now and the end of this year, and we could all 10x our money on that trade through a nice put trade, that all of this is worthwhile. Watching the show for an hour and 20 minutes, hanging out in the Discord, doing the research, doing all the work. It's all worthwhile. I'm so proud of the community for the work that they're doing. Even now, they're helping me with InMode. They've helped me with Molson Coors. We got to stay on top of the Molson Coors story, guys, because I still think that's a big one. Let's get active in the Discord and just get it going. By the way, guys, follow all of our accounts. We're doing lots of shorts. Have you guys seen our short clips on Instagram and TikTok? We have a TikTok account. What's a TikTok account, Dave? I don't even know what it is.
Dumb Money Live.
Yeah, please follow us on TikTok and heart those videos and watch them 2-3 times for the algo. We really appreciate it. We want to bring
watch them 3 times and hit the little heart button on your TikTok box, and everyone's happy.
Yeah, we want to bring the whole world into the investor class, and the only way that we do that is to help inspire people and show them that you don't have to be financially, you don't have to have financial expertise to do what we do on this show. You guys know it if you've been watching. You just got to be able to observe things, connect dots, and gain confidence that, Wall Street isn't all they're made out to be, and we have an edge on them. They don't have an edge on us. So it's been fun.
And with that, we're Dumb Money. Subscribe, and we will see you at a whole week of shows next week, Tuesday and Thursday, hopefully. So subscribe, smash the bell on your way out. One more thumbs up would really help us out. We'll see you next week. Have a great weekend.